Hello, everybody. Welcome to the Williams Corporation Capital webinar. I'm very excited to present to you today. It's 8 o'clock in Singapore. It's 1 o'clock in New Zealand. So let's get into it. Now, every good presentation needs a good legal disclaimer, and our legal disclaimer in full is here. But essentially, the summary of the legal disclaimer is these are our opinions and our views, and please make sure you seek your own independent legal advice before making an investment decision. So our agenda today, we're going to have an introduction to me, the speaker, a summary of the New Zealand property market, a summary of Williams Corporation, and a summary of Williams Corporation Capital. So a quick introduction to me, the speaker. I'm only going to do this briefly, but this is just so you know who I am and what my credentials are, so you know that the information in this presentation is relevant. So I come from a family where everyone is in construction. Mothers, father, auntie, uncle, granddad, cousins, the whole shebang. So everyone, I've been absolutely immersed at property for my entire life. I'm a qualified builder. So from the age of 16 to 20, I did my building apprenticeship. I've owned a business since 2011. I think of myself as a thought leader in the business space. I'm very active on social media. I run a top entrepreneurial podcast in New Zealand with my business partner, Blair Chappell. I'm personally invested in Williams Corporation Capital, which is the product I'm going to discuss with you today. I have a large personal property portfolio, and I am the co-founder of Williams Corporation. Now, Williams Corporation is the largest privately owned builder in New Zealand, based on building consents issued in a 12-month period. And we're also the second largest builder in all of New Zealand. So we're going to start with the New Zealand property market. So we're going to start, our agenda for the New Zealand property market is global issues, New Zealand population growth, New Zealand homes built, average household size, replacement cost of homes, and the New Zealand average house price. Now, I'm not going to go too much into world politics and world issues, because that in itself could be an entire presentation. But as you're all well aware, there are a lot of bad things that happen in the world, and there are lots of countries with huge populations that have serious problems. And one of the main things I want to emphasize from this point is New Zealand, even though we do have problems we need to face, it is a beautiful country with very low conflict that we can all live a happy life. And it's got lots of the fundamentals for property to grow because of how stable it is, not corrupt, etc. And all you need to do is turn on the news and you see all these awful things happening in the world. Things happening right now is the collapse we're seeing in Sri Lanka. We've got obviously the conflict between Russia and Ukraine, etc., etc. So my point here is New Zealand is a safe place where everyone lives happily. Now, New Zealand's population is steadily growing. We actually reached 5 million people 30 years before our official government predictions. So you can see here on this graph that New Zealand's population is always steadily growing. It grows on average about 100,000 people per year. Now this here shows the average houses built per year in New Zealand. And as you can see, it's actually been declining since 2017. So we build just under 30,000 houses each year. But as you can see from our population growth, we're not building enough houses to meet the demands of our population growth. There's one other factor here. If you don't mind just muting your mics, and then we'll turn them all on for QA at the end and we can have a really good discussion together. So the average household size is decreasing. So what this means is it actually means that without our population growing, we need more houses. So you can see a steady decrease over my entire lifetime. So I was born in 1993. And you can see that the average homes, the average people per household at the moment, about 2.4. And I can see that over the next decade going to 2.2, maybe even 2. So essentially, as households get smaller, we require more homes for the same size population. Another thing that's happening really aggressively in New Zealand is the replacement cost of homes. So it's costing significantly more each year to build houses, and that's causing real price growth and real inflation on current assets and obviously assets being built. Because New Zealand is very far away from everywhere, so obviously that's fantastic because we don't have those conflicts like you see in, say, Russia. But we also, it's very difficult for us to ship materials there. We have transport costs. Because of the size of our population, we don't have large factories and manufacturing. So building a house in New Zealand is disproportionate to the rest of the world. And we're seeing that inflation happening, the replacement cost of houses going up at a rapid rate. So essentially, what that all adds up to is a steady increase in the New Zealand average house price. Now, the New Zealand average house price since records began has increased by, on average, about 8% every year. Now, you'll see in the middle of this screen here, 30th of September 2014, the average house price in New Zealand was $420,000. And that was when I did my first ever property presentation. So that there is about here on the graph. Now, as you can actually see, you can see a large flat period since the GFC, where house prices weren't actually increasing. We had about 7 years where we didn't have a lot of growth in the New Zealand property market. And I remember standing up on stage doing a presentation very similar to this one. And I said, the fundamentals that mean New Zealand property, residential property, will grow in value over time are in place. They are stronger than they've been historically. And I see no reason why New Zealand house prices won't continue to rise. Now, I've said that every single year since 2014. So every year I've said it, right? And every single year, the economists have always said that houses will go down, with the exception of probably Tony Alexander. And as you can see, a steady growth of New Zealand property prices up until about 2020. So that is the COVID pandemic. Then we saw a really sharp rise where the rise of property prices increased disproportionately to one, where they normally increase, and two, probably to where their true value should have been. And then as you see, we've had a minor decline where they've pulled back. But if you were to put a trend line over here, house prices are we're about now where they should be. And the fundamentals are in place for them to grow over time. So myself personally, as an investor, I'm heavily buying property right now. Myself, as a director of Williams Corporation, we are buying lots of land. And we see the fundamentals in place for there to still be strong demand and for the asset values to increase in value at a rate that we've seen historically, which is that 8% per year. And it's based on the factors we covered previously in this presentation. So now a quick summary of Williams Corporation. We're going to cover our market position, our track record, the product we create, and our equity position. So this here is a report done by an independent company called BCI, Building Construction Institute of New Zealand. And this shows the top house builders in New Zealand. And this total here shows how many building consents they have received in the previous 12 months. Now, as you can see, GJ Gardner is the largest builder in New Zealand, but GJ Gardner is also a franchise. So that's not one big company. That's made up of about 40 little companies. You then have Williams Corporation. So we are the second largest builder in all of New Zealand and the largest privately owned builder in New Zealand based on building consents issued in a rolling 12 months. And then you can scroll down and you can see all the names below us, like Fletcher's, Mike Greer, Signature Homes, Classic Builders, Genium. And watch these numbers, they really drop off sharply. Right down to, you can see here, number 20 is only building 120 houses per year. Now, to all the people who are actively involved in the New Zealand construction industry, pretty much every pub you go to, you meet someone and they say they're building 100 houses a year. And pretty much all of those people are lying. And I don't know what it is about builders, but pretty much every single builder lies about the volume of work they're doing. And if you want to see the true numbers, you can see it on this BCI report, which is in your information pack when you ask for the Williams Corporation Capital Information Pack. But it's really important for you as an investor to do your due diligence and make sure if you're going to invest with a company or purchase from a company, they are actually building houses and they do have the track record that they tell you they do. Now, this is just a wee summary of Williams Corporation's delivery history. So you can see here that we started delivering houses in 2016. So that means we were buying back in 2014, 2015, and we delivered a grand total of 3 houses. It was a very big year. And so we've gone from 3 to 20 to 40 to 61 to 181 to 241 to 236. Oh, sorry, I'm reading from the wrong total. That was just Christchurch. Really sorry about that. So we've gone from 3 to 20 to 40 to 61 to 181 to 335 to 494. And this financial year, so the financial year for us starts on the 1st of April. So we've been trading for 6 months and we've delivered 309 houses this financial year. And we're on track to deliver between 600 and 800, depending on how a few key projects later in the financial year, whether they make it in before 31st of March or whether they're delivered after that. But essentially, our entire career, we've delivered a total of 1,443 houses, and that is $780 million New Zealand of revenue. It'll be fantastic because I think by the end of this financial year, we'll hit the big 1B of revenue. So that's a fantastic milestone for us as a business. Now, a little bit about our product. We were one of the really early townhouse builders in New Zealand. And the thing about the Williams Corporation product is we are a production builder. So each of our floor plans is designed. We have a very, very good team that designs every single square meter, door, cupboard of those homes. And every time we finish a house, we do a debrief meeting where we go through that house and work out how to make that floor plan better. So let's say you were to be buying a house from us like our 2-story 1-bed R. We have been building that product for 6 years. We have had approximately 12 product review meetings on that house. And we have ironed out that floor plan to be absolutely fantastic. So essentially, it's very, very common for someone to build a home and have regrets and have issues with that home. And because of the standardization component of our houses, we get rid of a lot of that. Now, also what that means is we can order our materials well in advance because we know exactly what materials we're using and exactly what quantities. So we avoid a lot of the huge material delays that have happened in the construction industry. And also we have things like safe building envelopes. We use a very, very robust construction methodology, which is explained more if I was selling you one of our houses. I'd explain in detail how we build a house and why. But the main things I want you as an investor looking at Williams Corporation Capital is we have a production product where we've ironed out the issues. It's low risk. You can see here it's a low risk building envelope, no flat roofs, no internal gutters. And it's just a product, 1, that we're proud of, 2, that's affordable, and 3, we don't carry that delivery risk, or the delivery risk is significantly mitigated compared to building bespoke products. Now, a little bit about our equity. This page, as you can see, is from the 30th of June. And as of the 30th of June, our equity was 47.5 million. Now, I want to discuss this equity for a moment. This is tax paid cash. Well, the big majority of it. There's a tiny, tiny component of myself and Blair's personal properties, but it's not like we bought some block of land back in 90s and we got it revalued and we're sitting on some paper money. This has nothing to do with the Williams Corporation market value. That's completely separate. This is a tax paid cash position. And what that is this is money that we've put on the line before any investors' funds were to be lost. So this is essentially our cash position. Obviously, not all of this money is held in cash, but a big majority of it is. And also, one other thing, as you can see, this is the 30th of June. So that is 3 months ago. Our equity position as of last month is actually 52 million of tax paid cash. So there's a good chunk of cash there for the investor when they're considering Williams Corporation capital. So now we're going to have a discussion about Williams Corporation capital. So we're going to do an executive summary, eligibility of who can invest, return, security, withdrawal procedure, funds under management, dividend history, monthly updates, allocation, investment process, and a summary. So again, we've got another legal disclaimer. There is a full one-page legal disclaimer at the start of the subscription agreement. We recommend that you read that before making an investment decision. I'm not going to read it in depth now, but please make sure you do read it if you choose to invest. So the executive summary of Williams Corporation Capital is we have more customers trying to buy houses from us than our equity base allows us to build. So we've got this great product, we've got lots of people trying to purchase it, and we don't have enough money to fulfill the needs of the market. So we essentially go to you, the investor, and we say, we would love it if you invested with us. We will give you security over the houses we are building, and we will pay you a 10% return per annum with dividends being paid quarterly. So that's the executive summary of why we are having this discussion. Now, the eligibility, Williams Corporation Capital is open to wholesale investors. Now, what is a wholesale investor? A wholesale investor is somebody that has more than $750,000 of cash. People who are in the business of investing, like if you're in shares or stocks or bonds. People with large net assets or large turnover over 5 million for the last 2 financial years. And there are a few other categories in the FMA Act, which we can discuss on a case-by-case basis with individuals. And we have a more detailed explanation of each of these categories in the IM. Now the return, it's a fantastic return. This will be why many of you are here today. So your return is 10% per annum gross, so that is before tax. We have a tax rate of 33%, and we pay everything out quarterly. So 2.5% is paid out each quarter. Now, it is currently the 28th of September. So that means hold on, my phone's just not working right at the time where I want it to work. 2 days' time, we will be paying our next dividend. So for me as an investor, that's a great day. And obviously for lots of our investors, it'll be a big dividend payment. At the moment, I'll discuss how much we're paying in a minute. So the security, as any investor knows, security is a key part of the investment process. And I'm going to talk through the Williams Corporation Capital security in 3 parts. So one part of our security are the rules. the rules that Williams Corporation must trade under to use the funds of Williams Corporation capital. So before a project begins, pre-sales must total 70% of the project's value. When funding a project, funding from Williams Corporation capital and banks or lenders cannot exceed 70% of the project's completed value. Now, I'm just going to spend some time on that 70%. That 70% of the end value is 100% of cost. So if you were to take the average Williams Corporation project, we would have a 15% GST. So that's a goods and service tax that needs to be paid to the government, and a 15% gross margin before our overhead. So that is 100% of cost. But what that means is it means that if there are cost overruns and you have a project that is essentially the margin is being eaten by cost overruns, we're covering that with our internal cash, not the investor's money. We use a standardized drawdown table for project funding. So essentially, each claim is made as a percentage of the build to milestones, e.g. slab down, roof on, windows in, etc., etc. And investors' funds can only be used for acquisition of sites and for funding ongoing developments. So we can't take your money and go say, right, let's buy a shopping mall, let's buy Air New Zealand shares. We can only use your money for what we're good at and what we've been doing for a long time and what we have a track record of great success in. The second part of the security is the base security. So the base security is myself and my business partner, Blair, have invested $5.9 million into Williams Corporation Capital B-Class shares. Now, what is a B-Class share? A B-Class share is an instrument where we cannot withdraw that money until every single dollar is repaid to the investors. And in the event of a loss in Williams Corporation Capital, that money would get lost first. You also receive a personal guarantee from myself and Blair, and this also extends to our personal trusts. And investors benefit from a Williams Corporation Group guarantee, which carries an equity position, as you can see here in June, $47.5 million. But as of today, it is $52 million. It's actually above that. And like we discussed, that's a true equity position. We haven't put the Williams Corporation company value in there. We haven't pumped up values of any of our assets. It's a cash position. You then take security over all of our projects. So there's three kinds of security. So the first security is a deed of assignment. So a deed of assignment is taken before we settle the land. So essentially, Williams Corporation will find a development site. We'll say, we're going to purchase this. We'll have a contract securing our purchase. And there will normally be a 6-month delay from the purchase to the settlement. And in that 6 months, we're doing our pre-sales and our consenting and getting that development ready for construction to start. And during that time, Williams Corporation Capital has a deed of assignment, which is a security owning the contract for that site. Once we settle, Williams Corporation Capital will normally take a first mortgage security over the site. And that during that time, we are finishing any consenting, finishing any pre-sales, clearing the site, making sure we've got that 70% pre-sold. And then we start construction. And Williams Corporation Capital will quite often do the early stage claims of that site, for example, slab down. Then when we introduce a primary funder, such as a main bank or a finance company or a high net worth individual, we will then take a second mortgage behind them. And at the moment, we can show you in the IM the breakdown between these securities. Now, if I was living in a perfect world, we currently have $154 million under management in our entities. There's about $133 million under management in Williams Corporation Capital. In a perfect world, I would get that up to 300 or 400 million and do everything with Williams Corporation Capital, build everything with essentially our cash, and do everything on a first mortgage basis. But there is a reality that we do want to make the most of things like bank interest rates because it's cost efficient money. Now, the withdrawal process, essentially when you withdraw, when you invest, you have a minimum lock-in period of 12 months. You need to, if you wish to withdraw, give us 6 months notice, and that is in writing. We have a withdrawal form and it's accepted by us. But if 33% of investors all try to withdraw their funds in the same period, we're allowed to extend that withdrawal from 6 months to 12 months. And that's essentially for the safety of you, the investor, for the safety of us as Williams Corporation, and for the safety of our customers, because it allows us to finish the houses we are building. And then as those houses settle, we can then easily return everybody's money. And at the moment in Williams Corporation, at any one time, we have about 600 to 650 houses under construction. And our average construction window is 8.5 months. So having that 12-month period gives us sufficient buffer to finish those houses under construction and return everyone's money in a mass withdrawal event. But we've actually traded through COVID lockdowns. We've traded through a property market that is less buoyant than it was, say, a year ago, and our withdrawals have been reasonably minimal. And that is actually shown right here. So we have 3 financial instruments: Williams Corporation Capital, Williams Corporation Capital Partnership, and Williams Corporation First Mortgage Investments. Now, for the purpose of today's presentation, we're discussing Williams Corporation Capital. That is our largest and most popular investment entity. And you can see here that our total funds under management is, as of August, and this will have been the end of August, is 53.6 million. And you can see really since October, our funds under management have been incredibly stable, which is absolutely fantastic, considering I think in the market other investments of this nature will not have been anywhere near as stable as that. These are the dividends that we have paid to our investors. So you can see here in total, we have paid $21.5 million of dividends gross. So obviously the government took their cut of that as well. So in June, we paid $3.6 million of dividends, and we're going to be paying about the same amount in 2 days' time. So myself as an investor, I'll get my check as well. It's a fantastic day. That as of today, we have in total about 350 investors that make up that total amount. And so that 3.6 million is split across all of those investors. I think our largest investor is about 6 million, and our smallest investor might be an associate of the company at, say, $50,000, and everywhere in between. Now, every month you get a letter from senior management. They're normally written by myself or Blair, and they just cover some key points of Williams Corporation. How many houses we sold, what percentage our work in progress is sold, what houses we're delivering, projects we're delivering, how many houses in each city were delivered to customers, a summary of our work in progress, and then some commentary about sales, some commentary about business, some commentary about the fund you're invested in, the size, how much cash we are carrying, and some general comments. So these are sent out for each fund, and they're personally written by myself or Blair, and it's absolutely fantastic. Now, one other thing you can do is if you look in the Dropbox or the Google Drive that is sent for this entity, you can see every single update since we opened Williams Corporation Capital 3 years ago. And it's really, really interesting to read the updates because what you can see is we have a fantastic track record of doing what we said we were going to do. And then what you get is an allocation table. I get so much positive feedback about this document because you can see on one page exactly what projects we're doing, how much they're valued at, the LVR, how much we've got from bank funders, the opening position of the fund, how much money the fund is against each project, and when each project is delivering. So this is a really, really positive document that gives the investor complete one snapshot of Williams Corporation. And just one key point down here, you can see that we have 1,043 homes that we are unconditionally committed to. We do have some other sites we're doing due diligence on, but that's what we are committed to building. Of that, 605 are sold. So 58% of our book is unconditionally sold, and 76% of all of our houses under construction are unconditionally sold. So some really, really great information there. Now, a little bit about the investment process. In the Google Drive link, there are 3 forms. Essentially, one form is the subscription agreement to invest in Williams Corporation capital. One form is your AML, anti-money laundering, which just confirms essentially your identity and the proof of the funds. And then another document is essentially an American tax. It's a foreign tax record. The primary purpose of the document is if you are or if you're not a tax resident in America. Now, they are financial documents, so they do look semi-complex at a glance, but when you actually just go through them page by page, they're very, very simple. And our client consultants in Williams Corporation, if you're here, you're probably working with a client consultant. If you're not, you're welcome to contact me directly or choose any client consultant you wish from our website. And we'll go through page by page with you, help you with the documents. You then send us the document, we audit them and send you the trust account number, and then you deposit the funds. So it's a very simple process. Like I said, we've got 350 investors currently with their funds under management. In our 3 years since we opened the fund, we've probably had maybe another 350 come in and out. So it's something that we're very familiar with. We've got the system down packed, and it's a process that we can make absolutely pleasurable for you, the investor. So as a summary, we're good people. We run a good company. We want you as an investor, and let's do it. And for further information, we have a Dropbox that has absolutely everything. So that has the full IM, information videos, our market position, all the updates, absolutely everything's there for you to do due diligence as an investor. And you can also obviously share this with your financial advisor or accountant or lawyer to receive independent advice as well. So now I'm just going to answer a few questions. I think my team has sent me some questions. I'll just open them up now and we'll do a little bit of a Q&A. So you should be able to enter your questions in Messenger and then I'll be answering them as we go. So the first question is, I see Williams Corporation is building in the 3 largest cities. Do you have any plans to expand into other cities? That's an absolutely fantastic question. So we currently have offices in New Zealand, in Auckland, Wellington, Christchurch, Tauranga, and Nelson. Now, we've actually just started building in Tauranga. We have a block of 7 under construction on Selwyn Street, and that's really, really positive. So yes, we are going to. We want to be the largest builder in New Zealand. So at the moment, so we want to be beating GJ, even though they are a franchise. And so we plan to have offices in the 10 largest cities in New Zealand, and we plan to be building in the 5 largest cities in New Zealand. So I can see us over the next probably 2 years opening a development office in Hamilton, and opening a development office in Hawke's Bay, probably Napier. What are Williams Corporation's? So this is the next question. What are Williams Corporation's forecasts for the next 5 years in terms of number of dwellings? Does Williams Corporation Capital look to deploy into Australia? So I'll answer those two questions separately. I should have actually read them separately. So I'll start with, what are Williams Corporation's forecasts for the next 5 years in terms of number of dwellings? So really, really good question. These are fantastic questions. Last year, if we go back in time 12 months, so let's go back to the end of last financial year. We had delivered just under 500 houses, so it was 494 houses. But at the peak of last year, we had actually sold 800 houses in a rolling 12 months. So that means this financial year, we're aiming to deliver 800 houses. So we're aiming to deliver the houses essentially that we sold last year. And at the moment, for a rolling 12 months, we've sold 502 or 508 houses. And that means we're selling on average 42 houses a month. So we could, based on the current markets, we could go from building 800 houses this year to 500 houses next year. And then we'll just build essentially based on our sales. Now, I'm very positive about the New Zealand market. I think that market sentiment is lower than it should be. I think our fundamentals are stronger than everyone realizes. And I think that we're going to see sales increase from now till about June next year. And we should get back closer to those 800 sales a year on a rolling 12 months. We obviously need to be doing over 1,600 a year to beat GJ. So that's obviously a goal of ours. And I think after the election, so we've obviously got an election late next year, we're then going to have a set of rules. And I think we're going to see increased sales then as well. So my forecast for the next 5 years is we're going to deliver somewhere between 700 and 800 houses this financial year. I think we could go as low as delivering 500 houses a year, but I think that we're going to see progressive growth where it goes essentially, say 700 deliveries this financial year, maybe 600 the following, then 7, 8, 9, and progressive growth after that. So that's a really good question. Does Williams Corporation Capital look to deploy into Australia? Good question. No. So we've purposely left Williams Corporation Capital as a New Zealand instrument. So your money is only used in New Zealand. We have a separate Williams Corporation Capital that we are using in Australia. Now, at the moment, we only have 2 development sites, both in Brisbane, a block of 27 and a block of 21. The block of 27 is going really well. We've released it for sale. We've received our development approval. We're about to get our building approval. And we've got most of the development under contract. So that's all really positive. And we're releasing our second development in 2 days' time on the 30th. But I'm very, very positive about what we're doing in Australia. I think we've nailed lots of components of the market. But as far as you as an investor in your funds, we've kept that separate. But you also have security over all of our money via the personal guarantee, which extends to our New Zealand and Australia pot of money. So you have access to our money, but your money is kept in the instrument where you invest. Any more questions, you're welcome to put in the chat. I'll keep questions open for another, say, 5 minutes while I sip on my coffee. I really do hope you've enjoyed this. I personally love talking about the property market. I love talking about Williams Corporation. I love talking about Williams Corporation Capital. Williams Corporation Capital is a product that I really, really believe in. I think that it's set up very well. I think that its success over the past 3 years has shown that we've really nailed what the market wants. I think the return is very fair for the investor, and it allows Williams Corporation to trade safely. It allows our customers to get great value homes, and it allows you as an investor to get a strong return. So I can see another question being typed as we speak, so I'll give the team a minute. Does Williams Corporation provide support to local communities? Great question. So yeah, we do donate. We donate probably just under $500,000 a year for the last few years. Our main thing we do is we are the primary sponsor of the New Zealand Flying Doctors Service. I think we have, it's either 4 or 5 planes that fly around New Zealand helping people. The main thing the New Zealand Flying Doctors Service does is that it takes people who essentially need intensive care facilities from city to city. So let's say you have a baby and the baby has some rare heart condition and you're in Westport, and Westport does not have the facilities to help that baby. The New Zealand Flying Doctors Service will fly to Westport, pick up the family and the baby and take them to a hospital, say Auckland, where the baby can receive the treatment that the baby needs. So we're the primary sponsor for them. We also do countless little things. We sponsor lots of sports teams. We sponsor the Christchurch Art Gallery. If you go on our website, there's a page called Communities, and you can see a lot of the work we are doing there. Why doesn't Williams Corporation build all homes with garages? Really good question. So firstly, we build some homes with garages. We probably are one of the largest builders of homes with garages in New Zealand because of the size of us. So at the moment on our stock list, there would be, let's say we have 300 houses available for sale on our stock list. It'd probably be a bit less than that. But there would be a good 25% of those homes that have garages. So essentially, why don't we build a house with a garage, or why don't we build a house with a car park? It comes down to affordability and it comes down to location. Me personally, I have done well financially, and I have the ability to drive everywhere and buy houses with garages. I have houses with garages or parking. I never use my car. I haven't driven my car. Oh, that's a lie. I've driven it once this year. But like, I never drive. I walk to work every day. I truly believe in well-located housing and not needing to use a car. I Uber everywhere or I walk. It keeps me fit and healthy, keeps some weight off. I believe that the future, especially once we have self-driving cars, it's going to be so cheap to just use a transport system such as Uber. And I believe that just having really well-located homes will be the future. But for those people that want a car park or a garage, we also want your business, and we provide those options for you. How does Williams Corporation overcome the lack of labour and materials in the market compared to other companies such as GJ Gardner? So because of our standardization, so let's break that down into 2 parts. So we'll break it down to labour. Because of our standardization, and we're building multiple of the same houses, our labour can be used more efficiently. So let's say you're a builder of ours in Christchurch, right? And you've worked for us for 3 years, and you work in a gang of 10 people. So in Christchurch, in the last 3 years, we would have delivered, say, 600 houses. That gang may have built 200 houses for Williams Corporation. And because they've built so many houses for us, they know our systems, processes, details, and we get a disproportionate output from labour than companies building, say, a bespoke house. So one, we work really hard on our relationships. We hold lots of functions with our labour sources. We do functions where we buy them beer, we look after them, we do shouts on site where we buy them things, we treat them with respect, we're organised, and we pay our bills on time. But also, because we're doing the same floor plans over and over again, we get disproportionate output. In the same way where if you look at, say, manufacturing a a Tesla or a Corolla versus a Rolls Royce. I think a Rolls Royce, which is a semi-bespoke car, takes months, if not years, to build, where you can roll a production car through the production line far faster. I should know the exact times, but I don't. As far as the material supply, we just mitigate that by paying our bills on time, treating our suppliers with respect, but being very, very organized. We have exact takeoffs for every one of our floor plans. When we purchase a site, we know how many of each floor plan we're going to fit on that site in a matter of days. We can be sending our purchase order for material supply, say a month after contracting our site. And we, on average, give all of our suppliers 6 to 11 months notice. So they're getting really big, long lead-in times. We're very organized. We send our suppliers statements each month. So in the statements, it shows all the purchase orders they've been sent, all the developments they've been assigned to, and total volumes that they need to hold for Williams Corporation. And then if we see risk in any part of the supply chain, we'll engage multiple suppliers. So we might have, say, as an example, 2 or 3 carpet suppliers that supply us, and we'll split up those purchase orders evenly. So it means if one supplier had an issue, we then can move that work to the others, which is really positive. So just had another question come in. You said that you've had some investors leave. What is the main reason for this? Do they often come back? Really good question. Normally the investors that leave were always going to leave. So 2 years ago, when the market was very, very hot, we had a lot of commercial investors that would have bought commercial property. They came to us and they said, I can't get my head around the prices at the moment. I'm just going to leave my money with you for 1 or 2 years. And then when I find a property I want to buy, I'm going to take it out. So we've dealt a lot with property people who put their money with us until they find a property asset that they wish to purchase. So that was a very, very common reason for withdrawal. Do they often come back? Yes, they do. It's very, very common for someone to say, buy an asset with cash, miss the return that we were paying them, and then put some debt on their asset and then put the money back with us. We do work really hard to really give good customer service to our investors, to look after them, to make sure they feel involved with Williams Corporation. And we do have a lot of investors come back. But yeah, the normal reason for someone to withdraw is purchase of a property asset. There were also, through COVID, people that were, say, in the tourism business that had trouble with their business and needed that cash to keep their business trading safely. That would probably be the second most common reason, people that are expanding their business or having an issue that needed that cash. So the next question, I'm a Singaporean. Must I be a resident before I purchase a property? Really good question. So only 3, it says resident. I should know the answer to this. I don't. I'm going to tell you the answer for citizen, and you'll need to contact a member of our team to get the answer for resident. But as far as citizens in New Zealand, Australia, and Singapore can all purchase property in New Zealand. That's why we have sales offices in New Zealand, Australia, and Singapore. And for investing in this instrument here, Williams Corporation Capital, we can essentially take anyone's money as long as you pass the AML and the investor eligibility in our country and your country. Now, we have done all of the due diligence for New Zealand investors investing in Williams Corporation Capital. We've done all of the due diligence for Australian investors investing in Williams Corporation Capital and Singaporean investors investing in Williams Corporation Capital. So we have all of the paperwork for wholesale investor criteria in our country and your country, all the crossovers, how you get your money to New Zealand, how you get your money back, and the tax advice. Obviously, seek your own advice as well, but we do have essentially a case study that we can provide to you. Any other country, we haven't done that research, but we can still technically take your money. Obviously, the easiest thing for us is for you to just get it to New Zealand and invest with us. But let's say you're in America or London, and you want to invest a large amount of money with us, and I would define large amount of money as, say, over 5 million. We can do all that due diligence for you and make sure that we have it sorted, how to get the money to New Zealand, how to get the money back, and what the tax rate is. So we're happy to do that for you. Well, that's been a 51-minute presentation. I think I might leave it at that. But I just want to, my final statements would be, this is my personal contact details. Take a picture of this. I am personally available anytime. When you go on the Williams Corporation website and you click Meet the Team, you can see the first 2 directors there, bang, bang. Now, I am very busy. I recommend working through a client consultant because a client consultant can give you really, really, really good customer service. They have more time than I do because they have less duties, and they can make sure you, the customer, are really looked after on a long-term basis. We would love to have you as an investor in Williams Corporation Capital. Please do consider investing, but please make sure that you seek your own financial advice before making an investment decision. Thank you very much, and I hope you enjoyed this presentation.